a certain magic in old business books. Before the internet, before financial influencers, wisdom was hard won, printed on yellowing paper and bound in cloth and leather. In their pages, you won't find the latest crypto hack or a get-rich-quick scheme. You'll find something better: strategy, cunning, and a level of financial shrewdness that's been forgotten. Today, we're dusting off those volumes to uncover 30 forgotten finance tricks you could only find in old business books. This isn't just history, it's your new advantage. 1. The envelope system for business expenses. Before budgeting apps, there was cash and envelopes. Assign a physical envelope for each business category: advertising, supplies, utilities. When the cash is gone, spending in that category stops. The physicality makes you acutely aware of your cash flow. 2. The two-bank float. Open a primary checking account and a secondary one at a different bank. Transfer only what you need for immediate bills to the primary account. Keep the rest in the secondary, out of sight and harder to spend impulsively. 3. The handwritten expense log. Carry a small pocket notebook. Every single expenditure, no matter how small, gets written down by hand. The act of writing it imprints the cost on your mind, curbing frivolous spending far more effectively than a passive app notification. 4. Bartering for professional services. The original skill for skill economy. Your company needs a new logo? Don't just pay cash. Offer your accounting services or product in exchange. It conserves cash and builds stronger business relationships. 5. The coffee can portfolio. The idea is simple. Find a few fundamentally sound, boringly excellent companies, invest in them consistently. Then, metaphorically, put the certificates in a coffee can and forget about them for 20 years. No chasing trends, just quiet, compounding growth. 6. Calculating your true hourly rate. Take your net income after taxes and expenses. Now, divide it by the total number of hours you work, including commuting, admin, and worrying at 2 a.m. This stark number will change what you outsource and what you delegate. 7. The one-in, one-out office rule. For every new piece of equipment or software you bring into the business, one old one must be sold, canceled, or removed. This fights cost creep and bloat before it starts. 8. Using postal codes for market research. Before big data, businesses would analyze the postcodes of their best customers, then buy targeted mailing lists for those specific geographic areas, a low-tech version of Facebook ad targeting 9. The Scotch rule for capital expenditures. For any significant business purchase, sleep on it. If you still want it just as badly in the morning, write the check, but leave it in a drawer for 24 hours. If your desire holds, then mail it. This kills impulse buys on equipment and software. 10. Building a sinking fund for taxes. Not a trick, but a forgotten discipline. Open a separate savings account and automatically transfer a percentage of every single payment you receive, say 25 to 30%, directly into it. When taxes are due, the money is waiting. Stress-free. 11. The personal bank of you loan. Instead of financing a car or equipment with a bank, loan the money to yourself from your own savings and pay yourself back with interest. The interest you pay goes back into your own pocket. 12. The 5-year pen. Buy the best, most reliable pen you can afford, one that will last 5 years. It's a small lesson in valuing long-term quality over short-term cheapness, applied to everything from chairs to computers. 13. The handshake contract. Before a deal is written, it's discussed. The old books emphasize the power of a clear, verbal agreement sealed with a handshake. It forces clarity of terms and builds a foundation of trust that paper can't replicate. 14. The no quota. Set a quota for yourself. You must say no to 5 opportunities, deals, or requests per week. This forces you to be ruthlessly selective about what deserves your time and capital. 15. The $1-a-day investment, the grandparent of micro-investing apps. The discipline of setting aside just $1 every single day without fail. At the end of the month, you invest that $30. Consistency trumps amount. 16. The handwritten thank you note, a lost art. After a deal, a sale, or even a simple meeting, a short, handwritten note. It's a negligible cost for immeasurable goodwill and top-of-mind awareness. 17. The family bank, pooling resources within a trusted family unit to provide interest-free loans for business startups or down payments, bypassing traditional lenders entirely. 18. The waste book, a small, cheap notebook you carry to jot down every idea, no matter how half-baked. It's not for formal plans, but for capturing the raw material of innovation that strikes when you're away from your desk. 19. Billing in tenths of an hour. Lawyers and consultants used to bill in 6-minute increments. Tracking your time this tightly for client work reveals exactly where your profit and your wasted time is hiding. 20. The 2-month emergency fund. Everyone preaches 3 to 6 months today. The old standard was a tight, focused 2 months of expenses, kept in cash. It was a starter fund, a psychological safety net designed to be built quickly, not a distant goal. 21. The cash on the barrelhead discount, offering a significant discount for immediate cash payment. It improves your cash flow instantly and rewards customers for saving you from the hassle of invoicing and collections. 22. The Sunday night review, spending 1 hour every Sunday night reviewing the past week's expenses, income, and the upcoming week's cash needs. This weekly rhythm kept you in absolute control. 23. Buying seconds and surplus. Purchasing slightly imperfect goods or overstock from manufacturers for office supplies, furniture, or even raw materials at a deep, deep discount. 24. The coffee is for closers rule, a brutal but effective filter. Only spend money on marketing and advertising that you can directly tie to a sale or a close. Everything else is vanity, not business. 25. The penny a day doubling. More than a parlor trick, it was used to teach the awesome power of compounding. It makes the abstract concept visceral and unforgettable. 26. The mileage ledger, a dedicated logbook in your car's glove compartment. Every business trip, every errand for the company gets logged with a date, purpose, and odometer reading, the ultimate in IRS-compliant record keeping. 27. The salary sandwich negotiation. When asking for a raise or negotiating a price, you never state the first number, you let them offer. Then you pause. The silence is your bread. Your counteroffer is the meat. 28. The 5-year letter. Write a letter to your future self detailing your business goals and financial targets for 5 years from now. Seal it. Open it in 5 years. The clarity and self-accountability are profound. 29. The paying yourself first ritual. The moment a client's check clears, the very first check you write is to your own savings or investment account, not what's left over. The first check. 30. The mentor's invoice. After a valuable meeting with a mentor, you don't pay them. Instead, you send them an invoice detailing what you learned and the actions you will take because of their advice. It's payment in respect and results. 30 tricks from a bygone era, but look closer. They aren't really about money. They're about mindset discipline, intentionality, and a hands-on understanding of your finances that no algorithm can replace. The next big advantage in your business or your personal wealth might not be in the next tech IPO. It might be waiting patiently in the pages of a forgotten book.